Okay, hello traders, and welcome to Election Tuesday, November 3rd. Good to be with you guys here this morning. It is an exciting morning for the country, for the markets. There is a lot going on this week, guys, not even just from the elections, but you got a whole array of central bank rate decisions that started last night with the RBA cutting rates to 0.1%. You got the BOE, you got the Fed on tap, you got non-farm payrolls on tap this week. So it is loaded. Good morning to everyone here in the room. Hey, Ted. Hey, Pete. Great to see you all this morning. So I'm going to run through this pretty quick. It's a hectic schedule today. And I want to, again, just take a moment to preface, it's a good time to be light. If you're not positioned, any positions that you do take, again, reduce position size, be a little bit more meticulous on your entry, way more protective on the stops. It's just not our best environment, guys. And it's an environment that retail tends to get chopped up in. So be careful with that. On the menu for today, we'll hit all the majors. So DXY, Sterling, Euro, Swissy, SPX. We'll hit Aussie, Dollar CAD, Kiwi, and Gold from last night. And then I do just want to hit the levels for dollar yen. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Hey, Ted, great seeing them in the room, sir. Good morning to you as well. All right, so here's DXY. I haven't put an update for you on the DXY as of late, but we've been following this tact real quick. I'm going to start from the top down. The election's here. Here's what the DXY looks like on the daily chart. So we've been talking about the rebound off of key support 1991, 92, 28. And so caught the yearly lows. We turned just ahead of it into the October drop there before moving higher. First level we talked about for resistance, 93.87. It's the 2016 low week close. It's the 2018 618 advance, right? Big level. We closed above that last week. Look where we just failed. Okay, we pushed higher this week and we failed at the 2011 trend line. You see it there in red, right? One touch, two touch, break, kind of pivoted back above, still resistance. So what does that mean? Well, for the near term, yeah, the risk is for a pullback in the dollar. And we highlighted that risk, right? Yesterday with the euro at support, dollar yen at key support. So not surprised to see a little bit of a kickback in the dollar, but the downside really should be governed, right? Here's the DXY in the daily chart. So one thing that looked, at least into the start of the month or into the start of the week, looked sort of encouraging was that we broke the October opening range highs and we closed above it yesterday. Here's the pullback. Now, again, it's important to know the environment we're in. There's very lower or reduced volume, right? Market participation. Everyone's kind of on the sidelines, want to see how this is going to pan out. On whole, it's important to note, again, guys, just as a sort of clerical thing, we're probably not going to know the winner tonight for the US election unless it's a landslide victory, right? Because of all these states that are even allowing counting. I mean, I think Pennsylvania is allowing counting up until Friday and even turn-ins. So it's going to be, it might be a debacle, right? And the markets aren't going to get a clear-cut directional bias right off the bat with a winner or a loser. So what does that mean? Again, you're going to get a lot of positioning rejammering, get a lot of people on the sidelines who don't want to take a stance until we get a little bit more clarity. That's all to say, be mindful of intraday price action. Don't trust everything you see and stay light, right? So here's the washout, the pullback in the dollar right at 16 momentum, right? That's what you expect to see if we are still in the downtrend, albeit while we pulled back this entire time, the dollar held 40 support. So we're still, in my opinion, ranging, broader focus still for a larger breakout in the dollar, but this pullback needs to hold 93.16 right here. So that's the 618 of the near-term advance, basic slope support. Got a pretty decent slope on the upside, catching the highs there into the start of the week. There's support at the slope, at the 618 of the advance. Kind of don't want to see anything drop beyond that if DXY is heading higher. Again, there's going to be a lot of whipsaw action over the next 24, 48 hours. So for what it's worth, One thing I do want to note that's not labeled on this chart is the weekly and monthly, I guess at this point, weekly and monthly open resistance right here, 94.10. I still want to see 94.25 breakout in the long side to give you sort of the run, just because it's the objective range highs now, right, for November. Obviously, it's only November 3rd, but you get the picture. So let's see what the dollar has today. Again, ideal scenario. I just throw this out there as a food for thought. A lot of people are big fans of it. Gun to my head, ideal scenario, kind of dollar washes out. You kind of get debacle. We get into midnight. No one knows what's going on. 2 o'clock in the morning. No one knows what's going on or something. You get a washout, right? But then you find some strength. You find some basing. Ideally, above 93.16, it's the election, it's FOMCs, it's non-farm payroll. I'm not going to put a line in the sand. Okay, you have to let price action play here. So that's DXY. So what does that mean for euro? Well, the last euro update, I wanted just to kind of highlight this major key support. Here's what we look like as we headed into the start of the week and month. So right ahead of the Sunday open, I highlighted you guys what's the level that we were looking for. 1616 on the weekly chart is the 2016 swing high. Objective range, close lows that we made later in the year in 2017, nice pivot in 2018. Pivot this year on the breakout, the lows, okay, that we made in September, all here, 116.16. The daily chart even highlighted a nice fibbo there. So you not only had that that October high, but you also had the 618 extension of the decline off the highs for the year. And that gave you 1633. So we noted in the beginning of the week, look for support there, right? It's a big region. Here's what it looked like ahead of the Sunday open. That's the zone we were looking for. Near-term resistance 17 and 1790. Bearish inval at the 618, or excuse me, that 38.2. We've adjusted the levels a little bit, but here's what it looks like now. Open of the week, we dropped right into that support zone. That held. Here's the recovery. 1700 taken out. 1719, we pushed that out a little bit, but there's the 100% extension. Oops, excuse me, let me get rid of that. 1719, October open. So on whole, very clean price action, right? And this is why I'm not turning on the dollar and that's it. Okay, dollar is going straight shot to hell. No, we came off of downtrend support. We came off of, in the DXY, uptrend resistance, worth a kickback, worth a rally in euro. Doesn't change the broader trend. So again, another situation here where, sure, heading into the US Open right now, yeah, could get a pullback here, but I still think that the risk is for that stab, we want to look for possible fade opportunity of 1750 and 1780. If you guys had asked me this yesterday, Mike, what was the ideal scenario? And I think in the webinar I was telling you guys on Daily FX, yeah, I was looking for a rally and failure off of one of these two levels, right? That's what I told you guys yesterday. Well, we're here. You're probably thinking to yourself, well, Mike, why aren't you looking for a short off those two levels, like you said? The breadth, the magnitude, and the speed of the advance doesn't have me wanting to kind of fade this right off the bat. Not to mention, obviously, uh, all the major event risk that's on tap over the next, 36 hours. That aside, just the speed of this makes me want to wait for a little bit more of a firm signal here. So could take another leg higher. Could see 1750. It would be a beautiful spot for failure if we get it bearish inval up here at 1780s. Downside break of the lows, you're looking for that slope, which comes in somewhere around 1580. I told you yesterday. It's going to be a little bit lower as you get later out in time decay. But you're looking for a drop at that 1580 level, and then really there's nothing till 15. There's a lot lined up down there at 15. So here's the daily chart again, just side by side again, just to show you, I mean, really beautiful setup here. Start of the week, dropped into support, that held, quick reversal. Here's 17, bearish inval up here. Don't think we get there, but might have a little bit more of a stretch here near term before resumption. Questions on euro? All right. That's number two. Sterling. So Sterling was the performer that we were worried about as far as kind of like the best one for dollar weakness if you did get it. Just because the breakdown came right back into the lows from last month and held. So here's Sterling. Let me. Well, I showed you this yesterday, but real quick, here's Sterling on the weekly charts, right? Just want to highlight again that we're in no man's land. We're still in this massive range. Highlighted key levels both on a lateral standpoint and a slope standpoint. There's a lot of room. There's a lot of room. Momentum flatlining at 50. So this is one of those trades where you want to really just pay attention and give a little bit more credence to just near-term price action. Here's what it looks like on the daily chart. Here's last month's range. Like I said yesterday, I thought that was a break of the monthly opening range that quickly recouped. Here's a failure at last month's range lows, so that didn't even break. And you're kind of still ranging here, right? First level I want to see hold resistance was 29.86 if this was going to move. It didn't. We're already trading above that. So look, same setup. Could get a spike higher, 30.83, 30.80s, 30.75s. This zone here is kind of where I'd want to see this fail if we are heading lower in sterling. But it's one of the lower conviction trades in my opinion. So I haven't really taken anything on this. Here's what the intraday chart looks like. The one saving grace, or the one thing that should give you some comfort, is that the slope worked pretty good. Here's what we're looking at sterling right ahead of the weekly open on Sunday. Right? We noted that you needed a break below at 618 to really get resumption, but I was looking for a recovery off that, and we got it. But boy, was it quick. I'm not going to art you guys and try to say that I was long here, but this is what was the idea. Look for the recovery off there for a test of former slope resistance, and we'd look to sort of short that again. Didn't get a chance to get in. It was really sudden. Here's the breakout. Kind of kicking myself because now, from here, it's a low conviction trade. The conviction was a rebound yesterday. We missed that one. At this point, I'm not going to chase it. What are the positions I'd be interested in? It'd be failure on 30.53 if we got it. So if we pump higher, I want to see failure at former slope support. Should be resistance. I want to see failure at the 618 retracement of the near-term decline, somewhere around 30.50. Don't forget for sterling, you do get on the 5th, okay, which is, what is that, Thursday? You're going to get the BOE inflation report and the interest rate decision. No expectations for change on rates from the MPC, but certainly could be a catalyst for some sterling price. Questions? All right. The other update I gave you on that European commodity or European block was dollar Swiss. Man, what another trade that worked out perfectly. So the idea here, and we've talked about this at length, was the 90.80 level. Okay, we pivoted back above that last week. We checked it as support, and we got a breakout of that multi-week downtrend. So right off the bat, we were looking for that extension move higher into 92s. 91, 94 was the region, right? You had a 618 retracement. You had the October open. You had upslope resistance. What a beauty. It was spot on. I mean, you can't get much cleaner than this. So we opened the week, spiked right into 94, 91, 94, 92.07 was the actual stretch high, registered a high at 92.07. It's the October open. And what a beautiful reversal. Weekly open support 91.61 gave out. Here's the Thursday, Friday low from last week in 91.38. That's on par with upslope support. I want to see a reaction here today. So the only difference that you see here for the amended levels is that a new high was registered. So that retracement, you kind of null and void. If we attack on a new retracement of the advance from here, the 38.2 comes in line right with that level at 91.40. Right here. Okay, so look for a reaction, look for inflection off that here today in US trade. Again, minding the fact of the time period that we're in and the market environment that we're in. I want to see a reaction off 91.40. A downside break, you're really looking for 91, any way you slice it. If it holds, remember, for me, at least my humble opinion, again, is that we are still heading higher in dollar Swiss. But from here, a break below this level would suggest that a larger correction's in hand before resumption. So, the election could be the catalyst. FOMC could be the catalyst. If we buckle below 91.40, that's your last reaction zone. Anything sub 90.80 is bearish. Period. End of conversation. All right. So that is Swissy, number 4. Interesting levels. That 90-80 threshold has just been so spot on. Again, you look at this from like the weekly chart on Swissy, really telling, really telling. Big moves here. Really got to get some decision on that range break. I want to go over SPX real quick. Here's SPX. Oh, by the way, I was showing you guys all of those on log scale. It's not going to be too different on FX, but with SPX, again, in log, what a call. We talked about it yesterday in the webinar on the fact that despite all the hoopla and despite all the noise and crazy volatility we've seen over the last couple of months, SPX has been in a range, a contractionary range right below uptrend resistance. And that's been our focus. And as we opened up the week, we said, look, I would have liked a deeper probe. I'll show you the near-term chart in a moment. We have a support level just lower in the SPX that didn't hit, but we're towards the bottom end of a contractionary zone. There's no need to get super bearish or super bullish. And you got the elections on tap. You got the interest rate decisions on tap from the BOE, the United States. Double whammy Friday with non-farm payrolls and CAD employment. So there's so much to look at here, but I digress. Coming off of the lower bounds of this multi-month consolidation, that's all I wanted to show you here. Daily chart looks like this. Okay. Again, the level of significance that we talked about last week was 32.19 to 32.26. That's the objective yearly open, longer dated 100% extension, but a nice pivot zone. We turned on Friday or Thursday, whatever that was, just pips, okay? Just points ahead of that support zone. So here's the recovery. We said this in the webinar yesterday. Could get higher. Here's the monthly open from last month. Sure, might be resistance, but you could even stretch a little higher. At the end of the day, you're still within the downtrend. You're still within the consolidation. If you choose to look at it from the confines of what we were looking at with the weekly charts, right? So you're still in consolidation. Technically, you broke the October range lows, so you'd want to see sort of resistance in this zone if we are heading lower. And the stage is set. You got an election on hand, you got interest rate decisions on hand, you got non-farm payrolls on hand. Here's the intraday chart. Here's the intraday chart. And again, there's that 32.19 level, 32.26 level that I wanted to see so badly last week. We didn't quite get the probe. Here's what I was showing you guys yesterday as the pivot as far as 30.40 or 33.40, excuse me, on the upside. We've broken that. We're poised to open up the US trade session above that. If we do, you could still see 33.97, 34. I wouldn't be surprised. It's a 50% retracement of the drop. It's a nice pivot in price right there at 33.97. If you go all the way back, that's actually the highs that he made back in February. So a nice zone. Okay, a nice zone. As far as the support targets are concerned, they're not changed. 32.19 is still key support. A break lower, you're looking for 31.71, 31.81. That's the January low. And that, my friends, is what would complete 2 equal legs off the record high. Okay, so that's my sort of sweet spot on the downside if we do get that drop lower in SPX. Initial focus right now, failure ahead of 32, instead of 30, ahead of 33.92, excuse me, if we are heading lower. Questions on SPX? Could be in play there. Could be in play there. Keep an eye on that. No, I'd work with that previous one. Yep. All right, so that is SPX number 5, and that's everything from that Sunday update. I really want to just kind of give you guys a heads up for the week and get us all geared up. So levels are unchanged. We turned right ahead of that support. We've broken this near-term pivot. You know, the risk is still for a larger recovery towards that 33.92.97 level. But that was the Sunday update. From last night, we wanted to give you an update on the commodity block, and they all look very interesting with all of them making pretty outstretched moves right ahead of all this event risk. Here's what Aussie looked like last night. So for Aussie, y'all know this level very well, 70.16, 70.42. We've been talking about it, you can say literally for years, because it is the objective yearly open for 2020 and 2019. It was resistance on the way up, pivot break on the way down, on the breakout rather, support. We got into that last week and we talked about that yesterday at length, being like, we are right here. We are at support. So it's either a break accelerated move below 70 or a rebound, just like we got every other attempt. Really strong inflection. Now, I do think that this will break eventually. Again, just my humble opinion, because well, I have to take that back. So we were looking at how every rebound off this, the breadth and the stretch has been smaller and smaller. Now we're starting to rival the same stretch that we made here is like 1.4 or something. So end of day 71.46 is what I put you guys as bearish inval. That's the level. So Aussie, unlike some of the other pairs, doesn't really have that much room. If it is going to stay in this downtrend, basically need to find resistance like here. Here's Aussie on the daily chart. There's that key zone. We couldn't close one single day below 70.16. And again, don't take my word for it. Here's the line chart. Not one single daily close below. So here's the rebound. Okay, cool. Are we straight bullish now? Well, not so fast. We're still under downtrend resistance. 71.46. Last month's open just higher, 71.58. Man, something's got to give here. Something's got to give here. So Aussie, pivotal resistance right into the open of US trade. Again, obviously, we did get the RBA interest rate decision, right? Reduced rates to 0.1% from that clip of 0.25% that was widely broadcasted, widely priced in. And this is the funny part, because this is where you get all those retail guys emailing you and being like, well, I mean, the RBA cut interest rates. Why is it moving higher? It doesn't make sense. Again, that's priced in. That's not what the market's moving on. In fact, most of these trades are trades closing out the bet for the RBA to cut interest rates. So 71.50s, 71.60s is resistance here. I want to see a reaction for Aussie. Here's the intraday chart again. That slope you're looking at off the yearly high, that's this right here in red. 618 is right above it. Look for a reaction here today. Okay, number 6. That is Aussie. Number 7, Loonie, dollar CAD. So we'll go over this again on Thursday ahead of the interest rate, the employment Friday print. But dollar CAD's making a move. Dollar CAD's making a move contrary to what we were looking for. I was looking for a support hold here, and I marked bearish in or bullish inval for you guys here. This is changing things for me. This is changing things for me. The breakout of that multi-week downtrend last week tested resistance as support, or tested former resistance as support. Again, stellar move. The pitchfork, extremely clean. Break of the median line, 75% resistance. Upper parallel catching that swing. Get the 1618 extension off the advance, the 88.6 off the high. Really nice, sort of calm confluence figures here for the commodity block. Break below the median line, saw an acceleration. That had to hold. That had to hold. So I'm going neutral on dollar CAD. I don't want to get bearish here. You just made a pretty massive 3-day decline off of resistance, and you're kind of teetering. This is the wider pitchfork that we were looking here on the daily chart, right? But it's problematic here. It's problematic here. If we close below this level, 3160 clip, 3156, there's nothing, in my humble opinion, to stop 3050, right? Which is where that 618, the longer multi-year 618 is. That's down here. So for me, it's, the risk is lower. I'm not in this. The ideal scenario is for a hold in this region, maybe even a stretch low into this pivot, but I didn't want to see that last. If we settle in the US Open down here, I think we need to allot the possibility for a larger decline here in dollar CAD. Not surprising, and I don't want to go into segues here, but you talk about the correlation with oil and what's going on in that market. This is something we talked about in the webinar yesterday as well, and I was, again, not a popular thing to say with everyone being all freaked out with what's going on, but the crude long looked pretty clean. Maybe not so much from a daily standpoint where you were plummeting, but from a lateral and slope standpoint. The first thing that kind of brought my attention was 34.22. What's 34.22? It's a simple 100 off the high. So that means two equal legs. This decline is the same of this decline. The hallmark of correction, right? So I'll look for a level there, sure. We took it down deeper into the intraday charts for crude, and a look at it had us within this really, it's not the cleanest per se, but a basic high-low high pitchfork, right? Pretty decent on the lower parallel, false breakout of the upper parallel. That lower parallel was just below 34.26, and when I looked at this yesterday, it was uncanny, because right into the open of trade, we broke that 34.22 level, and the wick literally caught the low at the parallel. Like, you can't make this up, right? And then there was the rip higher. So in the webinar, I was telling you guys yesterday, like, this would be a pretty decent place to recover. Now, just as it may be, this looks like a 1, 2, 3, 4, 5 to me. So I'm actually looking for this thing to teeter out into 38.70 near term for a pullback. But you get the picture. Again, crude strength typically will favor CAD. That's dollar CAD lower. No surprise. I think dollar CAD might possibly see another leg lower if crude continues. Questions, comments, concerns on dollar CAD? So near-term resistance, let's set that back at 32. Okay. Unfortunately, in my book, I would have bearish inval at 32.90 or 32.50 rather, but from an objective standpoint and where we are in trend, where we are in trade, where we are in time, I'd have to leave at the weekly open, monthly open, 33.13. So I'm gonna kind of like sit out dollar CAD, I think, for the next couple of days. And again, this one on Friday should be a big heavy hitter, especially if we don't have a resolution to the election yet. And you got NFPs and you got CAD employment. Keep the powder dry. All right, so that's Aussie and CAD. Number 8, here's Kiwi. Really interesting price action there as well. Nice recovery. Didn't quite take it into resistance like it is on Oz, but I think you got a little bit more upside to go. The 618 of the drop was 66.72, just higher. It's going to be that 2019 open at 67. Here's what Kiwi looked like last night, right? So the false break, 66.09, you guys remember, that was kind of the level we were looking for last week to break. And while we opened the week there, buckled below, quickly reversed. It did not last. So right off the bat, kind of the short idea got snuffed out real quick, right? With that recovery back above 66.09. So I brought your attention to that 618. Both of these levels are levels I wanted to see if we get failure, would be nice entry points. Bearish invalidation, still up at 67.30s. Okay, we would need to break this region, 67.23, 67.30. to really validate sort of a resumptive move for the broader uptrend. We're still under the assumption, again, that this correction might have another low to make, right? So does the recovery here find resistance ahead of 67? Ideally, ahead of 67.20s, ahead of 67.30s. That's kind of where I'm at with this one. It's not the cleanest from a slope standpoint. I mean, the longer term slope in blue is all right, but this gradient that we were following, like we got a false break there, we started to pivot, but even to the open, we pivoted on both sides. So I'm just leaving it there for reference. The upper parallel, again, in a zone we're watching anyway. More so, pay attention to the actual pitchfork and where we are in price. So that would highlight, again, at this point, sort of a key support here again, right? Right on the weekly open, that 66 handle. Look for exhaustion ahead of 67 if this is going to work. So you'll note that on all these dollar crosses, right, basically what we're saying is that the dollar still may have more downside to go in the near term before we find a little bit more of a sanctuary rally. All right. I'm a little out of order here. I'm going to hit dollar yen. I'll come back to gold. Here's number 9, last of the currency block. So dollar yen, what an exquisite rebound. Again, the major level at 104.12, 104 in general, this whole 104 handle. So the 2019 low is 104.46. Look at this as the weekly chart. I showed you guys this yesterday, but it's so important. So important. Major key support, major key support, major key support. Again, inevitably, on a risk-off move, this does break, in my humble opinion. But the whole idea has been on a pivot off this region. So for dollar yen, the daily chart notes a basic simple cap. Basic simple bounce. A lot of people saying this is a dead cap bounce. Well, maybe comparative to the other rebounds off 104, yeah, a little bit weaker. But major event risk is on tap. Don't get faked out. You're right in the middle of a key range of resistance at 105.20 and support at 104.12. Look for that break. The downside would keep the focus on 103.40 and the slope right around 103. Intraday looks like this. So for this to work, you want exhaustion ahead of 105.20, 105.16. Okay, so let's say, weekly open, by the way, is here now. Let's say like, we get the election results or something radical happens, you get a rip into 105.20 or just above, like you did here, right, just above the parallel, and then maybe it collapses lower. It's the buckle back below this region that would put me back on par for 104, but that's still key support. Okay, September lows, October lows, 1618, 100 confluence region, big figure, the works. It's all about 104 for dollar yen. All right, last but not least, gold. So everyone will be watching gold. It will be a reactor here, typically is to this data. We're at resistance, and if this continues, we have to kind of alleviate or give up on that gold correction move. So here's what gold looks like on whole. Let me take you back to the weekly charts real quick. So we turned from this region last week, and I thought it was going to be the resumptive move for a tag of 1836. You guys remember 1836 was the level that we were looking for back here in September. We never quite got it. Turned just ahead of 1840s and change. Last 2 weeks, we've been snuggling into this little resistance zone of current trend resistance and just the high close and the high week close from that former record high in 2011. It turned lower. Here we are checking it as resistance. Now look, Mike, risk off. There's an election. No one knows what the hell's going on. There might be a more shift to the left if we get this win or that win. Be it as it may, pivot above 1909 on a closed basis for the daily chart keeps you focused. 1932, 1935 is still the level I would need to mark resumption. Now, I know that's not helpful if you're looking for exhaustion here, but those are the levels that we need to stay disciplined with. We are at near-term resistance here at 1909, but even if it were to intra-week spike, it's 1932 and fail, I wouldn't get caught up in it. That's the break, in my humble opinion. That's the reversal close after the high we made, the new record high. That's the pivot that would put you on the resumptive trade on a weekly standpoint. Here's gold on the daily. So basic slope resistance from that mid-August high, 1 touch, 2 touch, 3 touch, 4 touch. We're testing it today. If you get a weekly close above, all right, cool, 1920, 1935 is the 38.2 of the drop. Remember on the weekly chart, we have 1931. Guess what's in that range between 1931 and 1935? Last month's opening range highs. So it's just really clean. It's just we are in this godforsaken zone. A really clear range. You need to be cautious. My favorite scenario, Mike Boutros with rainbows and like all your favorite, ideal scenarios, your fantasies playing out. This kind of rips maybe into the zone, maybe a little higher, fake out some hands, and then you get the final washout. I wanted to see 1837, but I'm not going to be stubborn. As a disclaimer, I don't have any positioning on this. That's just my humble opinion on what I'm seeing price. Here's what it looks like on the intraday. If this breaks near term, it's a breakout. It's pointless to try to deny it. Here's what the slope looks like off the highs. You know what I mean? That's your bearish inval. Look for a mark here today. This is going to be one for sure that there's so much headline event risk that gold is for certain going to take cues off of what the hell goes on over the next 36 hours. Stay nimble. Don't get caught up in just buying gold on the basis of buying gold in and of itself. If we break 1935, in my humble opinion, again, that is resumption. Anything short of that, be careful. Be careful. All right, guys, so that's all I got. Let me know if you have any other questions or trade setups before we wrap things up. I want to wish you guys all a very safe and exciting trading day. This is what we live for, these events as traders. And while the opportunity is there and the price action volatility is there, it is important that we take a step back, reduce position size on our average trade, and be a little bit more meticulous. If you don't have something that has a clear setup with a well-defined risk, guys, sit it out. FOMO in this market condition is deadly. If you want to be in a position because you have a broader, opinion on the market and you want to express it, if the discipline isn't there with proper risk management, then you're just throwing darts. Okay. So I'll leave it at that. Best of luck trading. Aurelian, Jay, Pete, Ted, everyone in here in the room. I will see you guys on Thursday. Cheers.